Welcome to the Blockchain Report, where we discuss all things blockchain technology, crypto assets, DeFi, NFTs, and much more. Today is your weekly news update. Jump into a little market recap. $1.2 trillion market cap. Let's see. ETH gas down a little bit. ETH dominance creeping up. Got the ETH merge coming in about a month. I believe September 19th or so. It's exciting, getting people really excited. You can see since we last left, I believe it was the 8th, so about a week ago. 2, 4, yeah. So right here, I kind of figured if we did pop up, it wouldn't be long lived as let's see, we're on the daily. You see how we go up higher, as I was saying before. You go up higher, your momentum is not going to be as strong. So your momentum, you go high right here, and then this high, this momentum's a little bit lower. Then the next high, the momentum drops a little bit more, and then you get this just barely higher than the last one, but not higher than the ones before that. And in order to really get up to these levels, you got to get momentum up high. You got to get this volume cranking, and you see we're just kind of staying even keel. So I expect to be coming down maybe 21.5. I think ultimately we come back down below 20 over the next few months. We might bounce around and come up a little bit, but ultimately we gotta drop down. See the daily RSI's up here, been holding it, so we need to reset. It's been 3 months. This is pretty. Let's see, how long has it stayed up that high before? Maybe a month. I mean, even above this 50 line, this is called the 50 line right in the middle. And even holding above that, it's been pretty steady. A little few dips right here, but since a month and a half, pretty much. So we're due for a little correction. We're due for a little pullback, and not necessarily a bad thing, but just be prepared, be cautious, set your stops tight, and do your best not to go to sleep with a big position or something that you're not comfortable, or trade you're not comfortable with being in. I know some trades I'm like, I don't really want to sleep. If I take a trade before bed, it's not a good idea. But if I'm in a trade that I'm managing, I don't care if it runs overnight. But it's just me. Your risk is all up to you. Jump into some news. Nvidia ups its Metaverse bet with new developer tools. The Nvidia Omniverse is launching a series of new tools for creators and developers in digital worlds to make life of the Metaverse more realistic. The hardware maker Nvidia is ramping up its efforts to make a stand in the Metaverse. Last Tuesday, the company revealed a set of new developer tools focused on Metaverse environments, including new AI capabilities, simulations, and other creative assets. They utilize the Omniverse kit along with apps such as Nucleus, Audio to Face, and Machinima. Yeah, we'll be able to access the new upgrades. NVIDIA says one primary function of the tools will be able to enhance building accurate digital twins and realistic avatars. It's pretty wild. NVIDIA's got some cool stuff planned. I know I was reached out to last year by Facebook VR or Meta VR for an engineering role, and the company itself, just an automatic turnoff, but Nvidia could be a cool place to work. I work down the like literally a few miles from the campus, and it's beautiful. It's absolutely beautiful. So they're looking at adding new kits or new dev kit for Metaverse, and it's clear that engagement in the Metaverse will continue to develop, and the market share in the Metaverse should surpass 50 billion in the next 4 years. And you get events, workplaces, and even university classes popping up in digital reality. So it's just going to make sense. And even banks are moving in there. Customer support for companies. It's incredible what applications we can provide in this. It's just the real world, but in a digital space. I mean, it's not real, but you can take reality and make it digital. So what's the problem? Now, that I will tell you, the problem is when people start living in that reality, in that form of reality. I It won't be surprising if people end up dying from exhaustion just being plugged into the VR for so long. But everything comes with its benefits, its drawbacks, its risk rewards. So just be smart about using this technology and don't let it run your life or ruin your life. CFTC and SEC propose amending reporting rules for large hedge fund on crypto exposure. 2 U.S. financial regulators cited the growth in the hedge fund industry as the reason for the proposed change, due in part to digital asset investments becoming more common. The U.S. Securities and Exchange Commission, or SEC, or the Bullying Commission, and the Commodity Futures Trading Commission, or CFTC, proposed requiring large investor advisors to certain hedge funds to report any exposure to digital assets. Wednesday, they proposed amending their confidential reporting from certain investment advisors to private funds of at least $500 million. The Forum PR would require qualifying hedge funds to not include exposure to cryptocurrencies while reporting cash and cash equivalents, but rather add them under a different category to report digital asset strategies accurately. They just really need to get their shit together for these regulations. They've had many, many years to implement some sort of regulation. Whether or not they agreed or believed it was going to be here long term, it's something that exists. And even things that we don't necessarily think have value, but do have value. I mean, like crypto, there is some value behind it because it is something that is built and it's a network. I mean, you can't say the internet's nothing just because you don't see it, but it is something that provides value and you can generate revenue from and income from. But with crypto, it kind of works a little bit different. But yeah, they should just have been way ahead of the ball on this. Way ahead of the ball on this. So now they're playing catch up and just causing real chaos with companies in the space. Like with XRP, Ripple, they take Ripple to court for hundreds of millions of dollars, and that's taxpayer money. That's our money that they're using to fight a project that isn't really doing anything wrong. So are we just going to be okay with that? I don't think it's really okay, but there's a lot of people out there that don't know what's going on or that don't know any better. But so I got to shine the light on all this bullshit. Decentralized apps on Polygon hit 37,000, rocketing 400% this year. It comes as a number of monthly active teams for the blockchain reached 11.8 8K in July, up from 8,000 in March. And man, that's wild. Polygon's killing it. Polygon team shared the figures via Wednesday blog post, which was sourced from partners Web3 development platform Alchemy, noting that the figure represents the cumulative number of applications ever launched on both the testnet and mainnet. It is also noted that the number of active monthly teams, a measure of developer activity on a blockchain, reached 11.8K at the end of July, up a whopping 47.5% from March. So just a couple months, they almost doubled the projects. Now, these aren't, I guess, all have to be active, but it looks like a good bit of them are. I mean, if it doubled, then there's got to be a good number. Although I don't know how many are actually not working anymore at all or active at all. But I guess we'll find out. The project team also highlighted a breakdown of DApp projects, which notably showed that 74% of teams integrated exclusively on Polygon, while 26% deployed on both Polygon and Ethereum. So Polygon's a EVM compatible Ethereum virtual machine, compatible proof of stake blockchain that hosts decentralized applications from a long list of prominent projects and brands in the crypto space, such as NFT marketplace OpenSea, Metaverse platforms Decentraland and Sandbox, DeFi lending platform Aave, and NFT venture fund gaming firm Animoca Brands. Blog post stated that DApp usage on Polygon has seen more than 142 million unique user addresses and 5 billion in assets secured, with around 1.6 transactions processed on the network to date. So they're killing it. And Polygon's been making some really good moves. Just their partnerships and getting involved with, was it the accelerator program that Disney has? They're doing a lot of good stuff. Let's actually had a little short on Matic the other day. Yeah, so Matic been looking good. Although you could see a little pullback with this market though. But ultimately I like Matic. Still not as big of a holder as I am of Cardano though, but yeah, Matic's a better mover too. We'll see how these layer 2s stack up. Russia plans to roll out digital ruble across all banks in 2024. The Russia bank started CBDC testing this year and expects to implement an official banking rollout in the year of presidential elections in 2024. The Bank of Russia continues working towards the upcoming adoption of the central bank digital currency, planning on official digital ruble rollout in a few years. According to the Bank of Russia's latest monetary policy update, the authority will begin to connect all banks and credit institutions to the digital ruble platform in 2024. That will be an important year for Russia, as the country is expected to hold presidential elections in March of 2024, and incumbent President Vladimir Putin has the constitutional right to get reelected. Wild. That's what you don't want to see in one place. You don't want the person to be there for decades, but I feel like you want them to be there long enough to where they can actually do a good job. But 4 years might be a little too short. Might be 6 years might be a good time, but having the right to get reelected, and someone that obviously has put their country in a shitty position. But what can you do? So by the time they get everything transferred over, the central bank expects to complete real money customer-to-customer transaction trials, as well as the testing of customer-to-business and business-to-customer settlements. Next year, in 2023, they also intend to conduct beta testing of digital ruble-based smart contracts for trades by a limited circle of participants. The bank pointed out that it expects to proceed with the CBDC rollout in a gradual manner, unlocking new different trials and features year by year. soon as the federal treasury is ready, the digital ruble will also feature consumer to government, business to government, government to consumer, and government to business payments, the Bank of Russia said. And they also introduced offline mode for the digital ruble by 2025, alongside integration of non-bank financial intermediaries, financial platforms, and exchange infrastructure. So first China, now them. It's coming. It's coming. I don't know what we can do to completely avoid it. I don't think we can. But having your crypto safe is going to be key. It's hard to really predict a lot of stuff about things when something's never been done like this before, or been introduced, or you just don't know what you don't know. But it sure does feel like it's a lot more regulated and controlled and monitored than just cash by people that we don't need to be monitored by even more. Ethereum ICO era whale address transfers 145,000 Ethereum weeks before the merge. The amount of ETH transferred just a month before the merge has generated community curiosity, while some claim it'll be dumped while others say it's for staking. This is cool. This is wild. You don't really see wallets that have been around for a long time that are inactive all of a sudden move. It's like, whoa, whoa, whoa. What's going on here? Did somebody wake up from a coma? So an Ethereum Whale wallet that participated in the Genesis initial coin offering and obtained about 150,000 Ethereum in 2014 was activated again on August 14th after 3 years of dormancy. Jeez, that's insane. The Whale address transferred 145,000 ETH to multiple wallets as the price of Ether surged to a new 3-month high over 2,000. Transfers were made in batches of 5,000 ETH, with a few transfers over 10,000 ETH. Total value is over 280 million, and the wallet address currently has a balance of 0.107 ETH. Shoot, man. It's only the second time the Whale wallet has been active since the ICO, the first being in July 2019 when it sent 5,000 ETH to the exchange Bitfinex, while Ether was trading at 219, with the transaction valued at just over $1 million. Ooh. The movement at such high amount of Ethereum attracted community attention, with many claiming it could be dumped before the merge. The official transition of the current proof-of-work-based blockchain to proof-of-stake one. However, it's important to note that most transactions are to unknown wallets rather than an exchange. Even if Whale eventually decides to dump their 145k ETH, $250 million selling pressure isn't considered significant enough to initiate a market dump. A few others believe that the Whale might be trying to stake their ETH to become a validator on the POS network and generate passive income. Sell the news mega dump coming. Maybe selling 5,000 ETH to open 5,000 future nodes. Just a little tongue-in-cheek. So proof of stake networks merge is expected September 15th, following the successful merge of Goerli testnet to the Beacon chain. So the Goerli testnet to the Beacon chain, which is the proof of stake chain activated in 2020, which is the final rehearsal before the official transition. So this is interesting to see. There's always some speculation about what they're going to do with these like whales. It's who knows? Who really knows unless you're that person or in their circle. But I find it really cool that just being in the space back then. I mean, I bought my first Bitcoin in 2015, but spent it that same year, was not very smart with it. But shoot, even getting in before, these people getting in 2014, 2013. I mean, especially Ethereum. I wonder, I'm always curious with people and how they got involved with crypto and what made them buy something that was just so speculative and just is like play money. It's like someone just made monopoly money on the internet, and all of a sudden there's billionaires overnight just from fun money. Pretty cool. Network and token freeze after Acala exploit raises questions. The Acala hack saw over 1 billion aUSD stablecoins minted from thin air. But now community members are scratching their heads wondering how a decentralized protocol would handle the cleanup. So the Acala network's aUSD stablecoin depegged by over 99% over the weekend and forced the Acala team to pause a hacker's wallet, raising concerns about its claim of being decentralized. On Sunday, a hacker took advantage of a bug on the IBTC aUSD liquidity pool, which resulted in 1.2 billion in aUSD being minted without collateral. This event crashed the US dollar peg stablecoin to a cent, and in response, the Acala team froze the erroneously minted tokens by placing the network in maintenance mode. The move also halted other features such as swaps, XCM, cross-chain communications on Polkadot, and the Oracle pallet price feeds until further notice. While the move put the network on maintenance mode and freezes funds, the hacker's wallet may be meant to protect users and the network from any further harm. Proponents of decentralization have cried foul. That's the thing. That's the catch-22. When things like this happen, we all want decentralization, but true decentralization will not save us from this. And it's and to just shut the network. That's the thing with Solana. Solana can just pause the network and shut things down at any point, but it's a dangerous game out there. That's all I can say about it. So Acala is a cross-chain decentralized finance hub that issues the aUSD stablecoin based on the Polkadot blockchain. aUSD is a crypto-backed stablecoin which Acala claims it's censorship resistant, and IBTC is a form of wrapped Bitcoin that can be used in DeFi protocols. And wrapped Bitcoin is just Bitcoin that is on a network that it's not normally on. It's like if Ethereum isn't on the Bitcoin network because they're just completely different protocols, but you can have wrapped Ethereum on the Bitcoin network. It's basically like a synthetic version of Ethereum on the network, or Bitcoin, wrapped Bitcoin on other networks is synthetic. It's a way to have, I guess, Bitcoin on that network. I don't know. I just thought it was kind of funny. But they're claiming this, if Acala centrally controls that decision, then is it really DeFi? So you'd have to have a go-to governance to be decentralized finance. Normally you'd have a vote with everyone on the network that holds the tokens and have a consensus. That's a true decentralized service, is you have the token holders themselves vote on a governance proposal. So this would, a member of the project's Discord proposed rolling back the chain to reverse the token mints altogether, but was challenged by another member who said that such action would set a harmful precedent. Now that's kind of what happened with Ethereum. So Ethereum had a hack, was it 2015, I think? Maybe 2016. But they got hacked, and they wanted to roll it back so people can get their funds back, and then they did that, causing a hard fork, and ETH Classic is what or Ethereum turned into ETH Classic, and then there was a split into a new chain that is now Ethereum, what we trade normally, and they just kept going, and because there was a lot of conflict in that decision. So I believe that's why Charles Hoskinson left. Here's a little bit more into what happened. So it was exploited by a bug, newly deployed liquidity pool. It was caused by a misconfiguration of the liquidity pool after it went live. Liquidity pool is a digital pile of cryptocurrency locked in a smart contract. So wallet believe the attacker still contains 1.27 billion aUSD. Acala has asked white hat hackers to return stolen funds. On-chain sleuths have pointed out that the attacker who minted the aUSD was not the only person to take advantage of the bug. Several others allegedly stole thousands of dollars worth of DOT from LPs. Last year aUSD successfully had its soft peg to the US dollar until the hack. After the attack, the price plunged from $1.03 to sub 1 penny. It said that last Sunday night they would continue to trace on-chain activity. And then later Monday, Acala community members created a proposal that would result in the return of all erroneously minted aUSD to the protocol and the tokens later being burnt. They did not They did not return requests for comments at press time. So let's check this out. Let's see what they propose. Okay. Date is Monday the 15th. Trace results identified, erroneously minted aUSD transferred. Let's see. So here's some proposal. Wow, this is pretty cool. I'm sure my brother would love to dig into this. I guess that's the wallet, the network. Yeah, that's really all on that. If there's anything more, then Acala, I feel like will hold up, but it's just things like this. You kind of want things like this to happen, even though it does suck and it is shitty. But in order to get better, you got to be tested. You got to have shit break. You got to have things happen that don't expect to happen. In a way, it's a good thing. Just help you get stronger, build a better network. And one little final piece of news or a little opinion is on the Tornado Cash. An alleged Tornado Cash developer was arrested. Are you next? If you're developing a crypto mixer, it's best to do it anonymously. Yeah, should Tim Cook of Apple be thrown in jail for manufacturing a phone that's used by criminals to plan heists, or the CEO of Boeing be punished for building planes the hijackers flew into World Trade Centers? Is the investor of a pressure cooker criminally responsible for making something that can be turned into a bomb? All valid points. But also I see the other side of the argument too. On Friday, news broke Dutch authorities arrested someone who allegedly contributed to the open source Tornado Cash cryptocurrency tumbler on Ethereum. The full story is not known yet, though many crypto and privacy advocates were immediately troubled by the prospect of criminalizing code. Like if you had money sent to you from this mixing service, even if someone just happened to get your address, like there's people sending money to celebrities that they don't like from this crypto mixing service just so they can be tagged by whoever, the law enforcement or the government, so they can come to your door saying, hey, we saw that this was sent to you. Do you know anything about this? So it's just a really shitty situation to be in. So we know the person arrested is 29-year-old male apprehended in Amsterdam. We know Tornado Cash is a service used to anonymize crypto transactions that was sanctioned by the U.S. Treasury Department on Monday. We know Dutch financial regulators opened a criminal investigation into that service in June. The coder, however, was only suspected of helping to code Tornado Cash and likewise only suspected of involvement in concealing criminal financial flows and facilitating money laundering, according to the Dutch Fiscal Information and Investigation Services. We do not know the full implications of this move, how wide the probe is, or what it might mean for crypto in the future. Multiple arrests are not ruled out. And this is crazy because they said only suspicion. They only suspect that you helped out with it. Like, it's like, come on, guys. So there's certain things about code writing that are pretty cut and dry. Oh, first here. Let's go back. For years, crypto coders acted under a cloud of uncertainty. There are real differences between how a truly decentralized program operates in the wild and other software projects. Differences that are not yet fully understood by the law, but there's something like self-denial at play by the crypto industry, which may lead to a false sense of security or confidence. There's certain things about writing code that are pretty cut and dry. At least in the US, merely publishing code on GitHub is almost always illegal if it's an original idea. Even for controversial things like ghost guns and crypto mixers, that's a legacy of the so-called cryptography wars 30 years ago. Ooh, let's check this out. Might be something I have to look into later. So code is a language, cryptography is speech, and the government is constitutionally prevented from banning its production under, say, munitions regulations. The situation gets dicier when you move beyond the act of writing. Without commenting on Tornado Cash specifically, acts like providing help to someone who wants to use the code, updating and mixing smart contract to a protocol, or operating a web app which can hook into a user's MetaMask while it strays into potentially criminal territory. This is not the first time a privacy app developer has been arrested. Last year, the U.S. Department of Justice arrested Roman Sterlingov, the operator and owner of crypto mixing service Bitcoin Fog, for allegedly assisting money laundering. That was a few months after Larry Dean Harmon pleaded guilty for running an unlicensed money transmitting business, Helix, and to conspiracy charges related to money laundering on the crypto mixer. So if we go after people for and saying they allegedly helped with money laundering, can we go to the federal government and tell them they're printing all this money that's being used for money laundering and drugs and guns and you name it? What are they're just gonna laugh at you. But that's the shitty part. That they have all the power, they can do what they want. If they don't like something that they don't have full transparency on, then they can shut it down. But you can do that with cash. So I don't know what their problem is. It's just another way to get their hands in the cookie jar, huh? Ooh, I'll have to read this. Get a Crypto Wars case. Nice. Well, let's go into markets one last time. Getting a little pump. Getting a little pump out of here. Let's check it out. Yeah, just kind of flatline. I mean, you get these like go sideways, drop, go kind of sideways, up, down, sideways. But this has been the worst. It just seemed like you'll get a little. Well, actually, let me go here. Is that 4 hours? Like, I mean, it's just been in this $2,000 range and shit, this 5K range just for months. But Bitcoin, let's check the daily. Yep, we gotta come down a little bit. 4 hour looks good though. 1 hour, yeah, we're gonna get a little pump. But that's it for me today. I appreciate y'all for joining me. Hope you have a wonderful day, beautiful day outside. Get some sun, that vitamin D. But I will catch you on the next one. Till then, stay green. Have a wonderful week. Peace.